money. For your peace of mind and long-term financial security in difficult times, having a solid financial safety net is essential. Welcome to our channel, where we examine the art of smart money management and offer you helpful advice on setting up reliable financial safety nets and emergency savings. In this video, we go in depth on the value of emergency savings and how they can shield you from unforeseen financial hardships. Whether you're beginning from zero or want to increase your current savings, we go over techniques to get your emergency fund off the ground. Why emergency funds matter? Because life is full of unforeseen shocks. It's important to be ready for any financial setbacks that can occur. Your emergency fund serves as a safety net, giving you a cushion of money to deal with unanticipated occurrences like medical emergencies, job loss, car repairs, or home maintenance. Without an emergency fund, you might be compelled to use high-interest loans, credit cards, or your long-term savings, which could have a long-term impact on your capacity to maintain financial security. You can face these difficulties with confidence and steer clear of debt by having a sizable emergency fund. Realistic savings goal setting attainable savings targets is the first step in creating an emergency fund. The amount you should try to save depends on your monthly spending, income stability, and financial commitments. Generally speaking, financial experts advise saving 3 to 6 months' worth of living expenses, but your particular situation may need modifying that amount. Striking a balance between actively saving and meeting your regular financial responsibilities is crucial. Start by reviewing your monthly spending plan and determining where you might make savings. Small adjustments, like cutting back on discretionary spending or securing better rates on your bills, can free up money that can be put into your emergency fund. Planning a savings program. It's time to create a strategy to achieve your savings goal after you've established one. Divide your savings goal into reachable goals and establish deadlines for completing each milestone. With this strategy, you might feel like you're making progress and are motivated as you go. Set up automatic transfers from your checking account to a different savings account set aside for emergencies to automate your savings. With this paying yourself first strategy, you can make sure that a percentage of your money is allocated to your emergency fund before you have the chance to spend it elsewhere. An increase in your savings rate. Finding techniques to raise your savings rate is essential if you want to hasten the building of your emergency fund. Look for ways to supplement your income through side jobs or freelance work. You can add the extra cash you make right away to your emergency fund, giving it a big boost. Abilities available, while taking into account variables like interest rates, costs, and liquidity. Discipline and consistent payments are needed to keep an emergency fund active. Think of it as a recurring monthly expense, similar to paying rent or a mortgage. Make sure you're devoting enough money to your emergency fund by continually reviewing and adjusting your spending plan. Let's move on to the topic of financial safety nets. A financial safety net offers long-term security while an emergency reserve is more short-term oriented. It might consist of retirement funds, investments, and insurance coverage. For long-term financial stability, creating a strong safety net is essential. Begin by making sure you have the necessary insurance, such as health, house, auto, and life insurance. This guards against the unexpected and lessens the financial toll of unanticipated events on you and your loved ones. Think about working with a financial advisor to create an investing plan that is suited to your objectives and risk appetite. Over time, investments can provide growth and prospective income, adding another level of security against looming financial worries. Finally, don't forget about retirement funds. You may guarantee that you're constructing a financial safety net for your retirement years by making contributions to retirement accounts, like a 401k or an IRA. Make the most of any company matching programs and contribute as much as you can. Don't let unforeseen costs or financial difficulties stop you in your tracks. Learn how to create a sizable emergency fund to take control of your financial destiny and give you a sense of security and stability. When it comes to wise money management, having emergency savings and safety nets might be the difference between success and failure. Take the first step today because it's never too late to start. Your future self will appreciate it. Join our channel to receive notifications of our newest videos on effective money management, personal finance advice, and methods for long-term financial success. Let's work together to lay a solid foundation that will enable you to weather any financial storm with assurance. Keep in mind that making wise financial decisions is the key to maintaining your financial stability. Thanks for watching.